right. Interesting. I don't know what you're listening to. All right. So you want to? I'm the one that got these guys to do it. I got them to do this, and all I'm doing is showing that. You see how light my beard is? I've started growing one, and I may have to. I don't know. Get some Sharpie.
You can put some. If you put Rogaine on your face,
We found the Yeti. Yes, America.
Or I can do a Royce thing and just let it grow out thick, but I don't want to do that. I want to keep it, the barely over a shadow look.
Get that
anyway.
Touch of gray.
You have to see it. There you go. For men. Anyway,
like DJ 50 Shades or something.
No.
I could be now since I've got the old.
Totally not related.
Go around singing. At one time I was, but I dropped that name because I couldn't get any kids' parties. Imagine that.
Oh boy.
What?
Yeah, we're not putting that on the air.
I could get the moms. I could get the mom's interest, but then it was like, no, you can't. That can't be your name at my kid's party. All right, let's move on before I get too deep in that. All right. Anyway, okay.
And
behind me,
another from the top.
Behind me, and cut. And
this is how Darin ended up on the Epstein list.
No, there's too many deals being made over that, and politics.
How do you know? How do you
agendas being formed specifically because of that?
Knowledge.
Yeah.
How do I know? It's a submarine. I own a submarine over by that island. Oh, wait a minute. That's not my submarine. It's someone else's. I wonder who. Let's go. We have
blow up the submarine, and we might be trying to get Greenland.
There you go. We might could use it there. That's coming up later in this show, by the way. So let's go ahead and get this thing started. I'm Darin with Arbitrage Trade.
Somewhere.
This is after the pop-up. And they'll write a pop-up book about it. All right, so here we go. We've got my guest, our Daniel Hopwood, top right hand, who's scratching his throat. And then we have bottom left hand, we have the bankster, JPM. Bottom right is the well-bearded, looking good there, Mr. Quanticus Maximus Royce Wells. And give the disclosure, go ahead and give that. We're not financial advisors, and this is not financial advice. Anything we say can and be used to you in court. I didn't even say it right. Anyway, I try to be funny there, but anyway, let's get out of here. This information provided is surely for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. All right, so let's do the update. I'm not sure how much more algorithmic a market could look, but let's take a look here. Maybe there was a few humans involved today. I don't know, but here's what the final numbers were. Dow Jones 49,076. That is plus 1.21. S&P 500 6,876. That's plus 1.17. And we have the NASDAQ, which was 23,224, which is plus 1.18. Wow, that looks pretty close. Like they all went under the same algorithm. This is what we're going to do today, guys. We're all going to go up. We're all going to go up plus, 1.20. But, just let's just get it off just a little bit so it doesn't look like it's all manipulated. Here we go. The dollar is 98.
What number would make you happy, Darin?
Yeah, I need to know this. I need to know this so I can write a book.
Right. Bestseller. Dollar 98.59 and rising. The VIX is under 17 again. We've got crude at 60.65, so it remains above 60. We have natural gas, which is what I added it this week because of what it's doing. It's $5.05, and it's up 30% just in the last 24 hours. Gold 48.26, silver 92.55. Copper I'm bringing into the conversation because it's also being in the conversation as in, we don't have a whole lot of copper to pull from, and we need it.
Alive, copper.
Same with silver, and it's at 580, and all of them have made the same path. They went down, and now they're coming back up again after the speech in Davos.
Yeah, but we stopped making pennies. Right. We should have plenty of copper.
Right.
Yeah.
Yeah.
For microchips.
So it wasn't because we just don't want pennies anymore. It's because we can't make them anymore, or it's going to cost more and more if we had kept the pennies around.
Human psychology is very interesting. Give them any reason and they'll believe it.
That's right. Social media, that's a good proof of it. We have Yeah, 10 years at 4.25. So that's higher than the last time we talked. And the 30, which that's important. And that's why I brought it up this week and probably will to see if it passes 5, but it's at 4.87. And one of the big indicators that some of the people I watch online says that if it hits 5, that's a bad thing. And it keeps rising after that. By the way, another thing that's been happening to silver, if you watch it after hours, some entity, when it closes wherever it is, slams it way down. And because this is what happened the last time silver took off and went crazy, is it would get slammed down after hours and then slammed down again. And then, but during the day, it would creep back up again. So we're basically, as you say, Daniel, we're rhyming with something in the past when we had this issue before. With
you know how he likes to do that, misappropriate words, to take things.
No, we did a deep dive on it. Force du jour, is that right? Force.
Oh yeah.
And we're looking like we're in that neighborhood again. So we'll have to see because of all the paper contracts versus all the physical silver. Anyway, that's not what we're going to talk about here.
Seems like you want to, buddy.
Okay.
I just want to keep going so there's no replies and there's no shut. Because look at Royce. He wants to look at it. It's about to just come out of his mouth.
We're fine. Everything's fine.
That's very good. You should be a politician. Keep it down there.
Oh no, I'm like, no, everything's wonderful. They're huge.
All right, that's a good way to start it. No, that's a good way to start it. We had Trump in Davos today, and he basically, this is what supposedly is what put the markets down yesterday. Is everybody was fearful that we were going to take over Greenland by force, and then the setup the next day was he let that just sit there. And then today he was like, no, I will never take it by force. And the markets went, choo, right as soon as he said it. And I think Daniel and I both have agreed that, no, this is more about the yield and the yen. We'll do the Y and Y, or the yield and the yen, right? Because of the shoe possibly on its way to dropping to the floor in the carry trade. You said that markets didn't like the idea of the tariffs on Europe, right? So we can get past that. We're going to go on to the next, which is the takes. So this is where you jump in, Daniel. I've talked enough. Too much, actually.
Yes.
Go ahead. Thank you. Hey, y'all don't have to agree. You don't have to agree. Just had to get some few things off my chest. Go ahead, Daniel.
Well, I thought the interesting thing is because, I'm in Asia, right? So I can see the futures throughout the night of how some of that news is reacting.
That's right. Exactly.
And for a while, there was kind of no news on why the market was down. And then, it got attributed to the tariffs. I was like, it doesn't make sense. We kind of know how this thing goes. We saw last year that, well after Liberation Day, anytime there was tariff talk, the market didn't react. And it was why are we kind of reacting on this one? And when you look at credit spreads, which are normally kind of a telling indicator of how markets actually feel, they hadn't moved at all. So it was kind of either this is just a quick dip or it's something else that we aren't kind of, privy to yet. And we saw today when, the market got relieved from what Trump said that we're back, we pretty much recovered. I'm not saying back. I'm just saying we recovered that big down day from the other day. So it's kind of what has really changed. Now I thought through doing the research for the Substack this week is that on a midterm year there's kind of a pretty typical cycle, and what you normally see is January through March the market is super choppy. It just kind of fluctuates up and down a few percent. We rip from March to April, and then April to October, we start to draw back down because everyone becomes uncertain of what these outcomes of, the various elections are going to be. And then once certainty is priced into the market, we go back up from there. And so I say that to say that big drops like this, regardless of the news, can probably be kind of expected for the next few months. Like markets are just going to be volatile. And, we had Royce last year at the end of the year saying, expect some things closer to February, right? So, according to the historical data, maybe it's more March, April, but, not too far off. And so, I'll just harp on this one more time because I like it, is if you look at anything outside of tech, some of those sectors are actually still looking pretty good. Even with that big down day we had the other day, those sectors weren't down. This was a lot of, NVIDIA taking the brunt of it. And if you look at the NVIDIA chart or, a lot of the Mag 7s other than Google, they look pretty distributive, which after a stock distributes, it doesn't normally have a good time afterwards.
Well, I mean, I heard some on the today say that tech was leading it back again, but not that I said that, but
I have not seen that. I'm happy to be wrong. I was asleep for 6 hours.
It'll always when most of the portfolios and your very wealthy people in the country are depending on the Mag 7, if you will, they're going to always have to save it because that's their clients. Royce, you've been dying to say stuff, so go ahead. I can see it.
I rebalanced my portfolio yesterday, so I'm happy.
Yeah.
Nothing
I
to
think-
complain
I think
about
I heard-
here.
I think Daniel did too, right? You said you did, and Josh, have you rebalanced?
I
don't have a whole lot to rebalance. Oh, okay.
I have not. I'm still waiting things out.
Gotcha.
So if you guys look at RSP, which is the S&P equal weight, we are up 4.5% on the year, or I should say since the end of last year, relative to the S&P is not up at all.
What is? I mean, because
there you go.
You're talking about takes. I mean, it's got a lot of what you said. It is kind of a nothing burger, but I think we just saw a situation where the market actually flinched. You get a lot of these headlines about the geopolitical factors and the macroeconomic factors and the tariffs and, whatever Trump's saying about Greenland, and everybody's blaming it on that. But I mean, I really just think we're seeing a lot of, the market's still uneasy. And yeah, when you inject some uncertainty into it, they don't, obviously they're going to do things, but it's kind of a lot of the same thing that we've been saying over the past 2 months. It's that same rotation outside of risk. We're going from risk on to risk off. And so you saw a lot of that selling. That's why you're seeing the equal weight that's outperforming a little bit better, because you're seeing a lot of that rotation out of the 7 and into the, what is it? The impressive 493 or whatever they're calling it now. I mean, it's a silly
they need better marketing.
Yeah, right. They might have just asked ChatGPT for that one or something. I don't know, but
Right.
Yeah, you're just kind of seeing the running, like the rotation out of the high value and back into the things that are stable, and that was reflected in the numbers that Darin rattled off with gold and silver and all these precious metals and things hitting all-time highs, because again, that rotation out of risk, it just kind of accelerated because they just had an excuse to accelerate it.
Well, we didn't mention, go ahead, Daniel, about your favorite subject, crypto. Didn't mention that, but it definitely it took a hit and is starting to try to come back up again after all this. So why did that happen, Daniel?
Well, I mean, if you look at like Bitcoin, at least in, I'll say recent history, not since the very beginning, like it pretty much just trades as a leveraged version of QQQ. So, I think, Josh shared a great article with us internally this week about, I think it was Josh, about how, crypto has turned into not originally what it was supposed to be. And, when you look at it, it's really just a risk on asset. It's not this risk off, decentralized, thing of how it trades.
Well, Royce kind of talked to us last
me.
week. Well, he talked to us last week about, where crypto's going, et cetera. So, and in fact, a whole new system that's being created. And I've seen a few of articles. I sent one of those actually internally as well, of someone that said the same thing. that everything's going to be based off of it. So, anything you wanted to add on there? Cliff Notes version, Royce, or Royce Notes version?
Royce Notes version. Forget Cliff. That guy.
That's right.
Right.
He's too old.
That guy got me through high school, so let's not hate on him too much.
All right, Cliff, Norm, same difference, right? No,
Everybody knows your name,
right?
No.
Cheers. What I think is going on, and like I said, this is just my own personal, do your own research, because I got to say that. I think they're testing out the levers and pulleys and basically brakes and all that inside the cryptocurrency markets. We are used to buy and hold. Well, crypto markets are not necessarily used to, they're definitely used to the hold thing. What happens when you start introducing stocks into a market that's a buy and hold? People aren't taking profit. So they're setting up all these different versions of the dollar, like RL, USD, USDT, USDC, all these other decentralized dollars. And basically they're testing the mechanisms in the system to be able to take profit. Oh, crypto got to a high. Great. Take that profit. Go back to your stable coin and basically flip it back, flip it forward, flip it back, flip it forward. This is basically more or less, it's like a dry run of the system, in my opinion. And so basically, when you get mechanisms like that, people are testing their algorithms. People are testing the behind the scenes. The banks are deploying and basically saying, okay, how much liquidity can we move without moving the market? Because remember, if all this is going to be regulated, all of it has to be tested. So just from that vantage, it's like, oh, okay, we have this much of Bitcoin. Okay, go to what? USDT, USDC, Ripple, Flare. Where are we going? Find somewhere to dump it and then pull it back. Dump it and pull it back and see how long it takes for people to be willing to buy and sell again. So it's no more just buy and hold. It's buy and let's invest and trade like the stock market now, since the stock market is pretty much coming in and setting up camp.
So we're in a testing period for crypto to see if it'll work on the grander scale. Is that what you're saying?
Liquidity. They're testing out liquidity rails.
Gotcha. Okay. And so that's basically gets us through the markets in general. It gets us through crypto. Let's move on to, I mean, we got to wrap up Davos, of course, because we said it a little bit, and we kind of hinted to Larry Fink and Mr.
You call that a hint?
Mr. Citadel. I mean Citadel. Sorry. I know. Sitting next to each other like they were annoyed, but they're actually, in my opinion, were on the same team. They're just playing bad cop, good cop, like a lot of politicians do. Oh, we got to wail about politics? This. Oh, not at all. Not at all. We act like we're enemies, but secretly we are on the same team.
BFF
so anyway,
for life.
Exactly.
Don't
crypto bros. Crypto untraceable crypto bros for life. All right. I'm not insinuating anything. Anyway,
you're blatantly saying it. You're right.
a few of the Davos things. Let's see. The big number or big things that were said is basically Greenland is going to be a golden dome. Trump hopes that there's going to be it's going to be covered with a golden dome. I assume that's like a military reference there.
Israel's Iron Dome?
Exactly. Iron Dome. Iron Dome. Yeah. And then you have the nuclear. He brought that up, that's basically going to be what he wants to really invest in now again, like we did a long time ago. But he said that we need to again. So now everybody's perking up about nuclear stocks. We have Trump saying that the Dow's going to go to 50K and then 100K in a short period of time. So without having to say what that short period of time is, of course, he's saying that it's going to, I guess, double and then double again.
Who looks at the Dow? what kind of boomer,
hey, there's your rotation, Daniel. There's your rotation.
Is that? The Dow's 30 stocks. Who cares?
Okay. Does anyone
know what that
means, though? Does anyone know what that means?
Give your take.
God bless. That's horrible. That's
Okay.
literally, that is horrible. That means they're going to inflate the dollar to the moon while they drain the swamp. So it's going to look like, yeah, the Dow's up at 50,000, the Dow's up at 100,000. Meanwhile, everything has been switching over to crypto. That's deflationary. So the wrong people are watching the wrong numbers and thinking that they're winning, and they're literally losing everything if it grows that quickly.
He accidentally said what's going to happen. He wasn't supposed to say that. I can see him doing that. His advisor's going, don't say this.
To be fair, Trump tells you exactly what he's gonna do. So I wouldn't, read too far into it.
That's why everyone's cheering and going, yeah, and I'm going, wow.
See, my take on this is, does he really understand what a 50 or 100% means? Because this is also the same guy that said he's lowering drug prices by like 1,000%. And I mean,
you'll pay me to take drugs. Thanks.
Right. Which means we get paid a boatload of money to take drugs. And so,
hello, Big Pharma.
Hello, no. I mean, the
vaccine. Hello,
the people who are
Pfizer.
purchasing the drugs. Yeah. Like, if they're going to pay me, 1,000% of what it's worth to take this drug, like, okay, sign me up.
Can I quote that? But it's
right.
It's basically
people don't
socialism
understand economics. A $50,000 Dow or 50,000 point Dow means we literally lost another 40 to 60% of the value of the current Dow.
Wait, isn't the Dow currently like 49K?
Is it?
Yeah. 49.
We're not talking about too much. So you said
last time I checked, I thought it was like at 30,000. So it's
at
actually
close. Didn't it come close to 50?
It's like 700 points off of.
Oh, okay, that's better. But at 100, at 100 though,
it's still a double though.
At 100, if you're doubling it, that means you literally deflated your dollar.
If we hit 100 by the end of his presidency, that would, on paper, my portfolio would look great, but it wouldn't actually be good. It'd be like worth less. That means Bitcoin would legitimately go to 1 million.
I'm hearing Bitcoin based on value should be at 40K right now, but that's just things you listen to.
What drives
when you compare two things, and I can't remember the two things that were being compared, so that's why I didn't bring it up. Although I did just bring it up.
You definitely did.
It's based off of how Bitcoin has done when compared on a chart to another big thing. And so if you did the same comparison today, then Bitcoin should actually be at 40 instead of where it is now at 90, based off of what the other measurement had done. Maybe it was gold. Do you think it was gold? It could have been.
It's very often compared to gold.
That might have been what it was
right now. Versus, Bitcoin,
that's not a fair assessment. I only say, no,
right? I get it. No, I get it.
From an economic standpoint, you can always find more gold. There's only so many Bitcoin. There's a finite amount of Bitcoin versus, great, a meteorite of gold falls to the planet. Suddenly gold just went down by $200, $300, $400 an ounce.
I say things to make you think, whether they're right or wrong, and things that I have heard, which have made me think. So, just bringing it. I am the conduit.
Things that make
this show. Yeah, that's right.
I get that there's like a finite number of Bitcoin, and I can understand that Bitcoin is the driving factor for other coins and things like that. But when you can literally just create a coin, that in and of itself kind of dilutes the value of what cryptocurrency actually is.
But not anyone can just make a coin.
And yes, you can dig out.
Sure, you ever heard of pump.fun?
Yeah, it literally, you can, there is a website.
Well, yes, you can make a coin, but are you backing it by actual US dollars? If you're backing it by actual US dollars, that's the difference. Anyone can make something, call it, hey, I got 500 of these. But unless you're actually backing it 1-to-1 with US dollars, that's the difference. Only the USDC, USDT, they're the only people who can actually mint more USDT and USDT, and you can get IOUs against those USDT and USDC but you can't yourself mint them.
That counterfeit USDTs,
Yeah, exactly.
the IOUs, like we have in the stock market with all these stocks that have gone way
that's
past.
all an option is technically.
Their float.
I'll buy it from you at this price if it hits this price. That's all
Thank you,
it is,
Wimpy.
an IOU.
On Thursday, Wimpy.
I'll gladly pay you for cheeseburger.
That's right. Exactly. All right. You have some more things about Larry Fink. What was he saying there, Daniel? Please give us his words of wisdom.
Yes, some of the highlights.
Besides reading bugs, go ahead.
Yeah, I'm not into that one. That's for sure.
Larry Sphincter.
No,
Ooh.
I'm gonna skip that one. So I guess some of the highlights out of Davos were Larry Fink said capitalism exacerbated income inequality and AI will make it worse, which was real rich coming from a billionaire who owns the company that has the most assets under management of any company in the world, like 14 trillion. The Anthropic CEO and DeepMind CEO said that AI is coming for junior level jobs, and that China is only 6 months behind the US in AI. So I just really love how all the rich people in the world get together once a year and like share all these happy thoughts and outlooks for the world. But I'll take, maybe it's just the optimist in me. I'll take the complete opposite. I think like all these people are wrong about AI. I think AI over the long term, right, will be like deflationary, and it'll be an opt-in economy, which I do think is a little dangerous for just the perspective of like, well, I'll just say it, lazy people do, right?
Ooh, he was there.
I'm just saying, it's like, if you don't have to work and you can do anything, right? Like, what would you do? I feel like a lot of people would feel very lost, and like, maybe I speak for myself, but I'm like, oh, sick. Like now I can do so much stuff because like it probably costs nothing now to like build an app and like try to do this thing or like, trade all the time. Right. I would like find a way to be productive and do my own thing. But that comes from like an individual pursuit level. But as a whole, I think, AI is like, will probably be the best thing since sliced bread. Like, yeah, sure, it can go wrong, but like anything can go wrong.
Yeah.
And I guess it's just tough to read these headlines where I'm like, damn, like these guys are such doomers. Like they just it just feels like when you read this, I'm like, y'all just want to like keep everything at the top, huh? It's like pull up the ladder behind you once you get up there.
Hey, I sent something out today, I remember, and it was about how the build out is going to be the just to get everything up to where it needs to be. It's going to be X amount of dollars, and it's going to take so long for the actual return on that investment to catch up that it's going to be many, many, many years before there's even an overall return on investment. So that's still out there on the whole AI thing, and that's why I forget who it was at Oracle that put out their earnings, and then everybody went crazy about it because maybe they were the most truthful about return on investment with AI right now, and it's scaring people because of how much money those companies still have to put out and have promised to be put out. And well, I mean, let's be honest, Congress has helped a lot with the money to supply it. The Fed has helped out an awful lot by throwing money at the investment banks and everything else. That I think we're trying to get above water, and it may take a while before the true return on investment in AI is realized. We're going to spend the money because we have to stay competitive with China. I still can't believe we're ahead because I thought they were better built out than we were, and that we're now having. That's why would we spend all this money to try to catch up if we're ahead? So that doesn't make any sense.
It's a lie.
Right, exactly. No, they don't tell lies, boys. Come on.
Wait, sorry. What's the lie?
So
We're ahead.
Statistically, I'm going to speak from a statistics point only.
Don't bring facts.
China has over 2,200 hyperscale data centers. The United States has about 200. You do the math.
Yep.
So think about that. We're ahead.
The math of what?
2,000 versus 200.
Okay, and
So we're definitely not ahead of them in what we're processing.
And it's just because they have better chips, right? Duh. Now we're selling those H200s to them.
And their AI is faster and runs on less power and is more efficient.
Yep.
So yeah, about that.
Anyway, for one story, you can always get an opposite and equal story the other way.
It's bigly.
Yeah. That's right.
We have bigly data.
So let's move a little bit lower on from China to Japan now. And what, in your opinion, is going on with the yen carry trade, Royce?
Yen carry trade. So did you guys hear about the adoption of Bitcoin and Ripple into the Japanese economy? That was released last week.
oh,
They are literally
have.
switching and doing lots and most of their transactions via the blockchain now.
Is there way ahead?
Yeah. and that was part of the rollout. Like I said, everything is going systematically. I honestly think that the carry trade will be absorbed. That negative interest rate is literally switching to the yen version of their digital assets, and there's still a carry trade. It's just not seen on this side of the dollar.
Well, evidently there's panic going on in Japan right now, though. So I don't know what's they're saying that
you
within
mean
the country.
being paid to put panic in the to say that there's panic in the media while sliding
never
under the cover. So the other thing, like you watch what's the Fred reports or whatever, right? I watch the market caps of the digital assets grow. Basically, you can actually see it because it's all on the blockchain. And if you're a DBA, you can basically go, oh, look at all this traffic. Look at the market cap of this one grow and this one grow and this one grow. And everyone's looking over here while the rest of the world is switching to over here. Did you know that money movement is down by about 8% globally in the fiat market?
No, did not know that.
Yeah. So a lot of things are changing, and they have us talking about the wrong things.
So Daniel, let us talk about the wrong things, because that's you brought some facts and figures. Please share about Japan in its current state, as far as we know.
yes. So, they've been raising their interest rates, and the prime minister, I forget what you call it, but held like kind of like an emergency vote to reduce some taxes there to help stimulate the economy. And because of that, you're seeing a similar thing in America right now on like our long dated bonds of traders pricing in uncertainty, right? So you sell bonds, it increases yields. And the Japanese 40-year went above 4% for the first time since 2007, which was when it was initially introduced. And the 30-year also crossed a level that it's never been at before. So traders are essentially saying, we don't like what you're doing, so you're going to have to pay us a lot for us to hold your debt instruments. And so as these rates go higher, that puts pressure on the yen carry trade, because as Royce was saying, yields used to be negative, right? So it was essentially free to borrow the money. And now they're actually saying, hey, you got to pay us like 4% to, hold these treasuries. And they're like, oh, well, that's a lot more of a hurdle that we have to climb to make money. And so I wouldn't be surprised if, that stark increase in the exchange of the yields was some pressure on the market, and, the market needed to sell off to, big funds rebalancing their portfolio to get some of the pressure off, potentially any kind of margin calls or tap on the shoulder that they got from the risk management team of having to take risk off the books. And if you look at US bonds, they're, kind of doing the same thing. If you look at the 10-year yield, it jumped I mean, it's back down now, but it jumped 150 basis points in like 2 days, which is a lot. That's a very big move. And, I think it's the world saying that like, we don't like the way governments are essentially spending their money. And we don't want to own treasuries the way we used to.
Well, Josh, that 2007 year, it's an interesting year worldwide, wasn't it? So just kind of put your 2 cents in here, or actually with inflation, put your $2 in.
Well, I mean, I do think that a lot of it is the unwinding of the carry trade. Like, I mean, all of these, like this, not necessarily panic selling, but they have to liquidate because, with the bond yields rising, like they bought the yen at this rate, and now with yields rising and the yen strengthening, they now owe that yen back at this rate. And so you have to, and so there, I mean, the margins on that, the yen carry trade were already extremely razor thin. I mean, you're talking about you're making a 1% to 2% a year, but it was basically printing money because it was, they were paying you to borrow money. So now that is gone by the wayside, and all these various funds now owe money that was, at whatever number down here. Now they owe yen at a number up here. And so it has increased a lot of the volatility and a lot of the uncertainty and a lot of the things that we really, that we've been concerned about. And they call, they can make headlines out of it, calling it one thing, but really it's kind of I don't speak Royce's backdoor Bitcoin nonsense, but this is like, but this is kind of the actual like USD version, like the fiat version of all of these backdoor trades, because people are seeing, that they're pointing it at one thing, but in reality, we're kind of saying all of these people are you're getting those like Daniel was saying, the Forex margin calls, and now people are owing this money at a vastly different rate. And
leveraged.
Right. You get that
Yes.
3 or 4% increase could completely wipe out years of a carry trade profits. And so, people are having to not necessarily panic sell, but they're having to liquidate so that they can repay those debts, so they're not defaulting. And it's just, it is one of those things that I think carries a lot more weight than people actually realize.
Yeah, and the reason I ran into 2007 is, guess back then what happened when money became tight, and we had an issue at that time with funds not being able to take care of things like you're talking about, and it's just there's not any money. And guess what went up back then as well, which is going up now, is your repo. The repos are going up again in these crazy numbers, just like they did way back in 2007. And so things are rhyming again, Daniel, with what happened back there. So it's just very tight for some of these guys who don't have Japan to go throw money at to try to get out of a situation. And hello, ISDA swaps. And if you guys should look at that, not you guys, but the people who are watching this, just do a little Google on ISDA swaps and see what you come up with there and how things get when things are tight with those swaps and people have to start selling things.
What's on the other side of that, though? Meaning,
well,
who
2009,
who's making money off of the positive interest rate now? Is it Japan? Is it the citizens? Is it the people who invest in Japan? Who's making the money off that new interest rate?
What do you think?
Are they suckering other people in? Because you get a CD at a bank, right? You go to CD, I'm like, I'm going to 3% or 4% yield, right? So, okay, are you suckering retail traders in as it's coming up, and the institutional people are saying, yeah, we're no longer playing over here. You can have it.
Yep. It'll be interesting to see. I mean, it's what we don't know, right? Rather than what we do know.
Yeah. Well, and that's why that's why you're seeing a lot of the selling, and another reason you're seeing a lot of the selling and liquidating is because, like, for the longest time, the Bank of Japan always, was trumpeting like we will always, like, we'll keep rates low forever. We'll suppress yields. Like, this will be a forever and permanent thing. And now there's a lot of extra, to Royce's credit, there's a lot of extra uncertainty thrown in there because we don't really know, they're not going to be the permanently dovish stance that they have been. And so, who is it that's now going to benefit? Like, where are they going to funnel that money in? Because it's not going to be the typical traders that were trading the carry trade, because now they don't, they don't know. We don't know what the policy is. We don't know how the Bank of Japan is going to proceed from here on out. So they have to have some sort of different market or different, suckers, if you will, to bring those people in. Because, the ones that the stable traders that were basing it on, like 2 decades of policy, now that's out the window.
Yep, exactly. The other side of that is, while that money was with Japan, what was Japan doing with it in order to be able to satisfy that negative yield? Because they hadn't been making money on it, doing whatever they were doing in order to satisfy the people who were parking their money to be able to provide them that return. But no one's asking those questions.
But I thought they had. I thought they were reinvesting it, kind of like
yes, but in what? In what that it was so substantial that they could still pay to carry that much?
The answer is an ancient Japanese secret.
I don't think it'd be like a physical asset. I think it'd be more of like you're essentially reinvesting it into the economy, and now that's why they can now do this, is because you're actually getting back to like positive wage growth, and the economy is vastly different than it was almost 20 years ago.
Okay,
I say they partied with it. All right, let's go with the last thing on the here, which is
doesn't sound Japanese, does it? It doesn't sound Japanese, does it? Okay,
not at all. Always, he's doing some correlation.
Japanese.
Some correlation causation from Royce Wells. It's a new segment.
Connect the dots, folks. Don't be sheep.
That's right. Last thing is Hassett. Tell us what Hassett's been saying lately, what Trump is doing with housing. What's he going to allow us to do? How is he going to allow us to hang ourselves? Go ahead. Go ahead.
You're probably not wrong. All right, so Kevin Hassett, who's
comment on that. I can't even comment.
So Kevin Hassett, who's currently the National Economic Council Director, which I didn't even know that was a position, said that Trump wants to announce a measure that will let Americans use the money in their 401k for a down payment on their home. Now, I got to be honest, I kind of thought you could already take money out of your maybe it's not your 401k, but your IRA, and you can use it to buy a home. You can use it to pay for school. And I believe maybe like big medical stuff. So maybe this is just in addition to, IRAs can do it, and now 401ks can do it.
You can, but there's a time frame. Like you have to put it back within the matter of 2 years, I think, like in full.
Okay. Well, I know at least when I was still working my first job, they would let you take a loan out on your 401k, which this was actually really interesting. And, people are interested, you can look into it with their provider. And this was with Fidelity. I could take a loan out on my 401k. So I would get all the cash out, and I would have to pay myself back in the 401k. You could pick the time period at a rate of like 4%, right? So like, not that there's necessarily an advantage, depending on the IRA you have and the options, like you can literally take it out, try to make more money, and then still pay yourself back more money. It's like this very interesting little like close-end hack towards yourself, assuming you do it right. Now, here's the potential issue. There's a few things, in my opinion. One is that with 401ks, it's a lot of people's only retirement kind of account that they have. So you're now having people potentially take out all of their retirement, put in their house, which, in my opinion is, if you're living in the house, it's not an asset, it's a liability. And it also, you making money on that is dependent on the housing market going up wherever you buy a house. The second issue is that a lot of the U.S. stock market's growth over the years is due to the automatic contribution that goes into 401ks, big pensions, and to some degree IRAs that have a limited takeout, we'll say, until a particular age. So it's guaranteed kind of money and growth in the market. So I used to have this theory that a 401k is really just a propaganda to make the stock market hold up, because it more or less forces people in, right? It's like it's not actually there as tax advantage. It's just there to make everything go up. And so if you put yourself in a position where everyone can now withdraw, because it's not super rich people that are worried about their 401k, it's the average person that has one is now going to withdraw all their money from the market to make a down payment, buy a house kind of thing. What if it's taken from somewhere to go somewhere else, what happens to the place that you take from? And so I'm not saying this will end badly, but
everything bubble.
I mean,
you remember
maybe.
You remember me bringing up about, I guess it was probably 6 months ago, about the investment brokers all wanting access and going to Congress and trying to get to where they can get access to the 401ks now. So it's like they're both racing to see who can get the 401ks money from all these people. And the way things go, the marketing campaign leading up to it will be so awesome that everybody will go, yeah, here, please take my money and do with it what you will. And hey, how about a combination of this 401k on a 50-year note now? Let's just mix all that up together on a 50-year house note.
Or basically make all this chaos with everyone pulling out their 401ks and whatever, while you're slipping money out of long-term investments into other assets to actually make more money.
Yep.
Oh, look, everyone else, if we make everyone do that, then we can slip out as well.
There you go. So are we back to the Roaring 20s? Something much different.
I'm not
run it hot. Let's run it hot. Just get out before what is it, 34?
White hot.
We are in the 20s again. I mean, so there is, did you say correlation causation?
2034.
No, before 20. Well, that's right. Most of the UN timeframes went from the Agenda 2030. They said, it'll be 2032 now or something like that.
Was it 1929 at the market crash?
Well, I'm looking it up right now.
Great Depression.
29 to 39.
Yeah, okay. That's what
okay. 29's coming up. We love those 100-year anniversaries.
Something agenda, something.
Yeah, 2030 was the Great Reset right there.
That's it. It's more than that. I mean, it's. I'm not gonna. We would have to have 8-show series on Agenda 2030 with the UN and their buddies, the WEF, who are actually having a meeting this week, planning the rest of our lives. And it's, as you have said before, Royce, about corporate governance. They've got all these big CEOs all in Switzerland right now with all of these UN people and all these people who basically control the world talking together.
A corporate Congress.
Who would have? You haven't said that at all before.
It's not collusion if you're all talking to each other, right?
I think I put this out on it might have been X, I don't know. Is that
we're gonna get canceled
again? Again? I have that badge of honor. I need another one for the left side. But they and I fought my way back, by the way, on followers. Anyway, which means I'm due to go down again.
Thumb your nose at them. Go ahead.
No, well, my point is that politicians need to wear like NASCAR outfits and have who they're sponsored by all over their bodies, so that we can see who it is, the special interest that they're representing.
That's anyway. In the fine print. That's in the fine print for the contracts that no one reads.
Yeah, and it's also, you can find it in whoever the lobbyers are, who are now bold again because we're in the wild, wild west. Lobbyers and money and corporate governance, et cetera, et cetera. Hey, that gives us stuff to talk about in the future weeks, though. So let's go ahead.
You heard him,
Royce.
Daniel. He wants an
It's great.
8-week series. Oh,
Royce. That's right.
It's for a good
I'd love for him to
podcast.
break that down. Yes.
Do a whole series on the New World Order conspiracy. Like,
Oh yes. Oh yes. Ray
Reported as
Dalio.
fact.
Just read Ray Dalio's latest book. He covers every bit of that. The new control in the new world and where
Which one,
everything's going.
The New World Order.
Yeah, some of those which we've talked about here actually. So let's move on to it's time for your chart there. So let's do after the bell crayons and charts with Royce Wells. What do you have for us this week here?
well, I'm still following Coca-Cola, folks. Coca-Cola.
There we go.
All right. So Coca-Cola. This is actually not KO, which is everyone expects for Coke. This is actually the consolidated 8. I've been personally in this particular trade since 107. And it's gone extremely nicely. Roughly got in somewhere over there. You see the green triangle over there about 111. Had a few bumps, got to the top, got a little nervous over here, truth be told, but the candles were not near the dots. I'm going to make this bigger just so you guys can see what I'm talking about. So candles weren't not near the dots, but once they did get near the dots, I'm like, okay, trying to take my leave, left it alone, jumped back in over here at about 118, rode all the way up to the dollar signs, got out, saw the red triangle, didn't overstay my welcome. Notice this was a nice, like this is a daily chart. So this was literally 3 weeks of a nothing burger, right? And then it started to fall. Basically, I'm never in a trade if I don't have yellow candles. So the moment I see yellow candles and the moment I see that the candles are retreating from my SAR dots that are sitting underneath them, I'm back in and I'm playing. So I got back in about 147 after the fall that happened about 2 weeks ago. That took it from about 160 all the way back down to about 145. Got out about 166 prior. So $15, 10%. I skipped that retracement, jumped back in on the first yellow candle and have been riding since. The challenge that we're playing with now and the long-term challenge is, will we get another green recycle to say that we're going to be able to get over that black line? If the trend top, which is the red, and trend bottom, which is the green, cannot get over that black line, it will get rejected and we will start to go back down. So I'm watching to see if we can get up to about 157 in the near future, sometime this week, maybe. If we can, then basically we got blue skies all the way up to about 190-ish once we're over that black line. If it cannot, then what I'm looking at is to see if that blue line is going to cross under the orange center line of our arbitrage band, and in doing so, basically Coke breaking under 150 becomes a sell on the arbitrage side of the house. And if it does become a sell, that means we're looking for a price resolution somewhere around 118.62 on our apocalypse band. Going to switch there. And why do we call for that? Easily, because we don't just look at a little trend, we look at the big trend. And that's where support is for our apocalypse band on this time frame. And so the apocalypse band even thinks it can get up to 201 over the next 6 months or so. So keep watching. We'll see where Coke goes in the near future. That's all.
All right. It was definitely using that midpoint as a support for sure.
Yes, sir.
It's like for a long time. All right. We'll pull back. That was After the Bell Crayons and Charts with Royce and Pips, basically. All right. Let's pull back here. So we have an update on our scorecard. The scorecard has actually been updated now. I'll go ahead and put that up for everybody to see, just so you can see that Josh, so boring. Won again. And I don't, this isn't updated, I don't think. I guess this is the old one for some reason. So don't look at that one. I can tell you though,
wait a minute,
that Josh is at 7. Well,
have you checked in the After the Bell channel?
Yeah, I'm wondering if I just pulled up the older one instead of the newer one. But
I got you.
Either way,
like, yeah,
either way,
one is definitely out.
Yeah, exactly. So I'm not blaming you, Royce. It's user error.
Oh, you better not. Oh no,
that's right.
I'm going to send you to Japan.
That's right.
Let's see who carry you there, brother.
carry on instead of okay. No,
There are worse places to be sent for sure.
Yeah, that is fair.
Well, hey, you can't die in Japan, right? There's no place to bury you. It's illegal to die. They will send you to the mainland if they think you're dying.
Hey, free flight.
one you'll enjoy for the rest of your life.
Only a millennial. No.
All right. So the update now is Josh has 7. Second place is Daniel with 3 now, and then Royce and I are fighting the caboose.
I'm not fighting. I'm just going with the flow.
I know you are. You're enjoying watching the rest of us fight over it, although there's not much of a fight. So, Josh, what is the thing we're fighting for this week? What is the stock?
Well, we've talked about, I guess, rare earths have been a kind of big topic here lately. Both, I guess we've been talking about it and, more of a macro issue, but especially with, given the things that were popped up today at Davos. But I was going to go with UAMY, the Antimony Corporation.
You, Amy, because I'm not. I thought about quadruple U too, so I was wondering if that was going to be it. There was a side bet on which one you pick, so I would have said you.
Bitty.
Oh, it's little bitty. We're going to go back to Crayons in Charge just for this contest. Here we go.
Little bitty what?
UAMY?
Yeah, little bitty what?
It's $9 stock.
I know.
It's a little bitty compared to. Okay, continue. Which we'll see. We'll have 50 cents.
Is there enough of a channel for this or no?
There's a $2 range. There's a $2 range.
$2, so 50 cents.
50 cents.
Okay. And you get to pick what is that channel then?
Roughly we're gonna go from, let's say, $10 all the way down to about
8.
Yeah, let's do 8. 8's a good spot.
8 to 10, that's 850, 850 to 9, etc., etc. So what are you doing there, JPM?
I'll take like 8 to 850.
Okay. Bottoms up.
All right, Darin, now's your chance.
Now's my chance.
Yeah.
Should we dominate the lower end? Let's see here. Let's see. The timeline we're on is days. Okay.
Mm-hmm.
All right. It's bouncing off the red. We're in a green. Is this going to stop though? This train going to move back the other way, bounce off the top of the channel. We're at 911. We're at 911, so I got to pick. I got to do next up then. So 850 to 9.
Hey, there you go. You did it.
All right,
well,
Daniel,
thanks.
Now
Thanks, Daddy.
Complimentary and condescending at the same time. That's just rude.
It was sort of. It did feel that way.
All right.
That was a pat on the head. You're so pretty.
Good. All right. Cool. And okay, good deal. I'm happy with that. All right.
Oh, who's next? He's saying he's happy with it.
Well, if he okay, let's go Daniel. Let's see which one he's happy with.
You guys took the middle, right?
Yeah, top and bottom.
No, they took $8 to $9. So we got up and to the right.
Where everything under 9.
Up and how far to the right?
Oh wait, so I can only go up.
Yes.
What's your favorite
9
thing?
to $9.50 or $9.50 to $10 and above.
Let's go 9 to 950.
Okay.
Thank you all for playing along.
Oh boy! All right.
No. There are indicators all over the place that say this thing's going down. I don't want to hear it.
Okay.
We're just looking at the daily though. So what that could be a very extended period.
Okay. We agree.
Well, now you can say what you want because we're past it. So
I would be so pissed off if he's right.
Are you going to change it to a lower time frame?
Trend top, trend bottom is not past the pink line. So if it got down there, it won't stay down there. But I don't think it's going to get down there. I think it's going to actually hold at 875, which means if it moves slowly, Darin has a very good chance of being the next winner, but more than likely it should stay above the 9-ish area and probably land between 950 and 975 in the next 7 days.
And that'll probably happen next Wednesday during the day. All right, let's go back to at the very end.
And let me see.
And it is time, Daniel, for things to start rhyming. So it's my time of year to win in this season.
I think it goes either well into what Royce has the top or Darin, you have the bottom.
Yeah, yeah. If it breaks over 10, it should land in my range.
This thing has an ATR of 10, and we're playing in a $2 range.
Yep.
That's why I was really confused and why we got to narrow it down to a $2 range.
I was like, wait, this thing moved 16% total today from top to bottom.
Hey, Daniel, for us apes, explain ATR.
Average true range. So it's how far a stock moves in a given day, including any gap prices in the stock, where ADR does not include the gap pricing.
And the funny thing is, this is actually one of the more stable rare earth ones that I could find.
Right now, yeah.
With all the
everything
happening,
should be doing this.
Let's say as long as it doesn't pop over 10, we should. If it pops over 10, actually, I should win.
There's another one on the list today that ran 25 today.
What's that?
AREC.
I don't know if I've heard of them.
By the way, did you see that after hours?
No, that one's definitely gonna taint.
That's what I'm saying. Which I doubt there's very good options. And
look up SGML. It has a ATR of 13.5%. It's like the highest one I can find. But I've put
lithium.
Yeah. I've put this in our Substack before, and if you look at it on the Apocalypse Band on a daily.
Oh snap! Okay.
Yeah.
There is good and there's bad here.
If it holds the Apocalypse RSI,
it's over. It's over. Like literally.
That has almost a $10 range.
It has a $13%
range. So that means $1.30-ish in a day.
If I'm actually range bounding this, I would almost give it $8.
I've tried to get into the stock.
Notice that pink line, folks. Notice where it is. There's about to definitely be a run on lithium.
Dude, I was literally just about to say, I'm actually thinking about buying, throwing some cash at this because. Well, what's Lithium Americas then? It was shorted like crazy. What's Lithium Americas?
What's that?
It might be LA. It might. Oh, is it LAC?
I think so.
Yeah, it is LAC. Just curious because that's the one that so many people were involved in.
The Los Angeles Lakers.
So just for a reference point, if SGML goes from where it is now to just the top of the Apocalypse band, it's 118%.
Yeah, but see this.
If you measure it,
this is way more of a tight channel.
Yeah. What about UU? That's the last one I'll ask for you to look at. 4 U's.
Nope.
It's pretty extended.
Yeah.
Yeah, that.
Oh yeah, no, hard pass on this one.
Yeah, and those are the ones that Darin finds daily.
And it's squeezing. No, that's not one of mine, but it's squeezing. Look at that. Wow. Not squeezing up. I'm talking about the channel squeezing in.
I don't actually hate LAC, but I don't love it. I can see
the one that remember it was a meme stock
until it makes a move.
Yeah.
Put on the watch list.
I already did. I made that list for that Darin sent earlier.
But what about the one we just did? Is it looks like it's all curling up. All the quantum stocks are curling up now after getting destroyed.
What, qubits?
Yeah, look at qubits. QBTS. That's the last one I'll ask again, even though I said the last one was. It's QBTS.
Oh.
Actually, okay.
These all took a dive today, and they're starting to curl back up.
Oh, nothing.
There's 10.
But look at the aftermarket.
There's 10%.
Look at the aftermarket. It's up 40 cents in the aftermarket.
Yeah, and there's a good reason for it.
Anyway,
but I say nothing. I say nothing.
Yeah, I mean, I have a watch list of all of the quantum ones, and they're all doing the same thing, down 5 to 6%, and now curling back up again.
Yeah.
A couple
Hey,
of
Josh,
percent.
have you played with the new Z Pro or at Level Pro yet?
No.
It's nice. It's
Okay.
so nice.
Indicators.
All right, no company secrets. We have to.
No, I'm just saying it. This is a shameless plug. I'm like, if we're here, may as well, right?
Yeah, absolutely.
It combines. You can basically multiple bands and multiple time frames. So that means, like, for example, on the Z Pro, I'm actually looking at the advance on the 1 hour, the 4 hour, and then on the daily, I'm looking at the RSI and the weekly to get a single line to tell me across all 4 time frames, is it a buy trend or a sell trend?
That's
So that way I don't
simplifying
have
things.
to do any computation. It's like, are we above the line or below the line? Which way are we going?
And people saying, where do I buy this?
Yeah, right? Exactly. ArbitrageTrade.com.
Exactly. I mean, I'm talking about brokerages and everything.
Yeah.
Where can I get my hands on this?
So long-term, short-term, and it allows you to just play.
24 hours soon.
Almost. And right at 100%. Notice the top's out. Think. Back down we go.
All right, guys.
Here's the
That's a
probability,
lot of stuff.
folks. Here's the probability.
Yeah, we covered a lot of stuff. We went over an hour again. Good job, guys. That's a lot of material. And we will see everybody again here next week after Greenland. Hopefully it might be a U.S. property by next week. I don't know.
State.
Is that why it's going to be snowing in the United States all week this weekend? Because we're going for Greenland. We're trying to get used to it.
It's retribution.
Well, no. Let me go do the conspiracy thing. Yeah, you remember they've been working on changing weather patterns. So this is all just
This is the
preparing
Greenland
it at the
package.
right time. Exactly. Did you say green patch?
Those
Greenland
dang
pack.
chemtrails.
Oh, patch.
It's in the Freedom package.
I was kind of like software. This is the Greenland patch to our weather and put into the software 4.0. All right. Good job, guys. We will see everyone next week. Everybody that's in the Midwest, actually almost, it's like, I don't know how many states are involved in this crazy weather storm.
Good luck.
But for once, we're in that 10 to 24 inch patch, which never happens. It's historic. We didn't even talk about it.
Yeah,
because
my
there's
wife
going to be
bought me snow pants, and I'm like, what in the world?
It's going to be
See,
like
I expect-
77 this weekend if y'all need to come down here. Like,
Oh boy, I expect to see pictures of that on Instagram, Royce. But yeah, well,
Josh, if you see me at your door Friday afternoon going, hey, brother.
hey, we just
Here we
cleaned
all
yesterday.
are.
You're good.
All right, I'll come in hugging.
we're
Okay.
going to hitch a ride. Yes, that's right. But yeah, make sure that you bundle up and get ready, do all your house preparations, etc., so that you still have a house and it's not everything frozen. But this also will have an economic impact. It definitely will. That's why the natural gas prices have gone up. So we'll get to talk about next week what the impact of this storm, if it's still happening, maybe or maybe not, does to our economy. So we will see you guys then.
Yeah,
Bye.
if we're thawed by then.
Yes, that's right.